Zach?
Yep, just unmuted. Can you hear me okay, Dale?
Yeah, got loud and clear, Zach. Great to meet
Wonderful.
you.
Nice to meet you. I've enjoyed following you on Twitter for a while, and I'm glad we made some introductions and happy to be here.
Yeah, and I have interviewed Garrett, one of your associates in the past, so I didn't know that that was where you came from, but I'm glad I reached out. Are you going to be sharing the screen to show some of your work and what you're thinking?
Yeah, at some point I'm happy to do that. Have
Okay.
a few charts that we can go over, but didn't know where you wanted to jump off.
Okay. Well, you've used Zoom before, right?
Yeah,
Okay,
yeah.
so you could always just put them up, and we'll start. I read a little bit about you. I do that so that I'm a little bit prepped for talking to guests. And what I didn't get, I knew where you started with Avi, and I was wondering what were you doing, and what were you doing prior to becoming an Elliotician and getting involved in the financial markets? What was the broken road that led you into this game?
So
And
I know
who,
you're a very religious man, and I am too. I'm an Orthodox Jew, and we have a concept that we call hishkacha pratis. That basically, we know that like in the Adjustment Bureau, that the Creator of all things has a divine plan. And we don't always see what's going on in the divine plan, but there are things that we can see that happen in our lives that are put there for a reason that kind of steer us on a path.
okay,
So I came out to Maryland.
Providence.
Exactly. I started off teaching Sunday school in Hebrew school when I first came to University of Maryland from Oklahoma. And that's actually where I met Avi Gilbert. We were co-teachers. He was working as an attorney at the time. And we had a class of some very, very rough seventh graders. It was after school Hebrew school. They didn't really want to be there. And so, we just became friends. And then, at one point, my wife and I were getting married and we didn't know what community we wanted to live in. And he recommended that we move to the community that we lived in outside of DC. And I was working, in addition to teaching Sunday school and Hebrew school, I was also working as a mortgage broker.
Okay.
So that was kind of my first entry into the financial markets. And that was, around 2001, 2002, that I started that. Around 2006, started to get a little bit rocky before things like really got messy. And I started to look and pivot to doing something else. I also was not as big into the subprime. I did a lot more of the alt A kind of lending. So hopefully I wasn't contributing to one of the bigger problems. I do know some of the people who are like the two guys in The Big Short. Right, exactly. So I started working with a friend's father at MetLife doing retirement planning and insurance. And so that was, and at that time, Avi Gilbert said, "Hey, you got to read this book about Elliott Wave." And I said, no, Prechter's book. I said, no, I got this, Avi. MetLife has this 10-question asset allocation questionnaire. It allows us to decide how much of a mix of stocks and bonds the person should have, and everything's going to be fine. The market's always up over, a 30-year period when people want to retire. So, we got this. He's like, no, Zach. Like, that was written by attorneys who want plausible deniability if anything goes completely awry.
Right.
Exactly. So, but I pushed it off and I didn't really read the book for a while. And then I was just starting to get my Series 7 and start studying for CFP stuff in 2008. And things were kind of a little bit more volatile than what all of the normal models for long-term gains in the market, seem to show. So I decided to give Avi's book a try. And it was, it just clicked. Like the context of, seeing the market in terms of patterns of an ebb and flow of sentiment just really made a lot of sense, and it resonated. And I started charting and doing that on the side with Avi, when right at the early days when he started his website, and started enjoying seeing those counts develop. And at the time I was still very much in following other people's analysis, not just Avi's, and trying to mimic my own and not really trying to create my own charts from scratch. And there were some biases there, from following some other Elliott wave groups. But once I started to really look at what I was seeing in a bigger context from my own starting point, things really clicked well. And that's when I joined Avi.Site in earnest, and we launched our service Stock Waves, which is focuses on hundreds of individual stocks in different sectors.
Wow, nice journey, and how fortuitous to meet Avi.
Exactly.
Kind of a turning point. I have a Hebrew school story I could tell you. Want to hear it?
Please.
So so you notice that I'm a convert. So anyway, Jewish as well. Went to Hebrew school, and like you said, most of the kids in junior high, they don't want to be in Hebrew school. And I learned my Haftorah on a record. I had to keep picking up the needle and scratching it. But anyway, it was a Saturday, and a friend of mine and I decided to ditch Hebrew school, and our favorite hangout was the bowling alley. We like pinball machines and so forth. So do you think we were conspicuous at the bowling alley in our suits at 8:30 in the morning on Saturday? And then on top of it, my buddy is trying to get dimes out of the ball washing machine. So our parents ended up being called, and that's my funny Hebrew school story. Two
awesome.
Young kids at a bowling alley at 8:30 in the morning, dressed up in their suit and tie. So we're looking at S&Ps here, and I would say that you have a contrarian view here. I know there are some wave guys that have been talking about it. So actually, I want to ask you about this because I forgot who it was. They've been talking about if this is a bear market, it'd be the shortest one. All kinds of reasons why this can't be the end of the bear market that you have labeled as a 4. So,
right.
I think that, if we get this pullback, I was saying maybe to 3,800, they'll become even more entrenched and fight it all the way up. Interesting major topping zone that you have too. So you want to explain the why, and I see you have all the emotions underneath as well. And looks like we will have exuberance again one day.
So I started to really look at Elliott wave as the framework that kind of explains and gives labels for the way to talk about all of the other technical analysis and measures of sentiment and swings in emotions in terms of the market, as well as incorporating cycles, because Elliott wave is fractal in nature and works by different degrees. So I was really enjoying the first part of your show when you're talking with Blake and with Stylanos. And seeing some of the same, shapes and things that you guys were drawing in more rough sketches and with regular trend lines and fib retracements that you're looking for. And we're doing the same, but adding a little bit of the labels. While I know some people get really confused and it's just this alphabet soup of numbers and letters, I think it gives you that framework, and so you can explain when you have this this inverse or this head and shoulders pattern. You can say, well, that's the smaller degree 3, 4, and 5 of a bigger top, and then the AB structure of the start of the correction. And so that's your typical head and shoulders, and it gives you that Elliott wave context. And then I think the other thing that it really helps with is one, thinking in terms of patterns at different degrees. And so you have the same structures that manifest inside the larger degrees. So, this is a view that I've been keeping up on my Twitter page as my pinned tweet. In following this progression, I took the normal sentiment cycle of, of denial for the start of a crash and fear, panic, desperation, capitulation. And then I bent that into the shape of kind of an Elliott wave ABC correction. And then I added all of the bullish ones, the despondency, depression, which doesn't sound very bullish, apathy, indifference, reluctance, optimism, excitement, and exuberance, and kind of put them at points where, we're following this subwave path, the progression of the 5 waves inside that larger degree swing. At kind of those points of where, those peaks of that kind of emotion could be felt. I think one of the things that's throwing a lot of people off is that what we're counting as the wave 2 consolidation in the moves off of 2020 was so quick and rapid. And that this as a consolidation as wave 4 is so much larger in magnitude that it seems disproportionate compared to the wave 2. But we know that in Elliott wave, we have guideline for alteration. Exactly. So, when you look at this is deep in as far as fibs, but this was incredibly, incredibly shallow. So technically it's still valid. And, Garrett and I, in looking at so many different individual stocks and the sectors, sector ETFs, and drilling down into those, see so much evidence that we really haven't hit the peaks and have not completed a clean structure in terms of this major top. And the exuberance that I expect to see, things were certainly pretty frothy in November to January of last year, but
real frothy.
When we look out, in terms of our looking at different degrees for Elliott wave, and my chart doesn't fill in all of the data prior to like 1950 something, but basically Garrett just did a recent presentation on this, where he talked a lot more about the big macro degree. But what I'm counting is the grand supercycle wave structure starts back in 1857. At the Civil War. Yeah. And so that wave 2 bottomed was the end of the Great Depression. That 1929 crash was that grand supercycle wave 2. So we're still filling out 100 years of almost of upside in that grand supercycle wave 3. So when we're talking about exuberance, it's not just exuberance in the 5th wave off of the 2009 lows, and it's not just the exuberance of the 5th wave off the 2020 lows, but we're also dealing with the exuberance of this supercycle 5th wave, from all the way back in 1930s. So, that's like 4 degrees at very large degrees of exuberance. And, we know that a lot of times with as extended as some of the other 5th waves have gotten, like we have the primary degree 5th wave inside the cycle 5, the basically 1990s, all the way up to 2000, was a hugely extended move. And if we're going to get anything similar to that, the 5th wave that we're looking at, from here, just this intermediate degree 5th, could certainly extend well over 18 months, 12 to 18 months, and could even get another, extension beyond that. And if it doesn't break significant support on that next decline.
Okay, so, on your prior chart, it looked like you showed that the high was due on the 5 on the previous chart. It looked like it was May of 23, the previous chart you had up there.
Yeah, more or less. I'm pushing. This is kind of, I have this green cycle wave 1 here. Really, if this is going to be all of the super cycle 5, then the degrees on this move off 2009 should probably be up 1 level to be cycle degrees. So I have, a sneaky suspicion that this might actually just be a huge wave one of a vastly more extended super cycle 5 off of 2009. But the consolidation that we would get after whatever top comes over the next 12 to 18 months, or barring more extensions beyond that, it is going to be a pretty significant decline, even if it's not a grand super cycle wave 4 that's going to match magnitude with 1929.
So, okay.
Great
Wow.
Depression.
Okay, so
but the other thing is that
okay, I don't know. Do you want to do an interview, or you want or a lecture?
No. Interview.
Okay.
Please.
All right. So I'd like to ask you. I know some Ellioticians that think that, and they're good, and they're right and wrong like everyone else, right, Zach? I mean, if you have
absolutely,
a 60-70% hit rate, you're pretty good. They're looking at, where you have. They're actually looking at this zone in the next few months as being an X wave that we're having currently, which leads to a lower low under 3650. Is that an alternate count, or not even in your playbook?
I went ahead and gave that a little bit of credence by putting this yellow alt 5, but I have it in my faded mustard, where this drop, this was under ideal support for a 4th wave. Okay. And it can count, the NASDAQ can count better. And certainly the Russell can count better as having topped in that move. And there are some of the sectors that Garrett and I are more concerned about. But really a lot of things just do not look like they are complete off of 2020. And a lot of them don't look like they're complete off of 2009. So we're giving things the benefit of the doubt. That said, we do want to see, everything is based on.
I see all your alternate counts.
Is fractal, right?
Yeah. Okay.
Is based on, is fractal in nature, and so we're looking for confirmation at those multiple degrees. And so off of the low, I'm going to try and get this. I like this. This is a put call ratio that I started to use. That is based on dollar value instead of actual numbers of puts and calls.
Okay.
So it kind of smooths things out a little bit. But we're looking for that fractal structure, and so we know that this 5th wave that we want to see to complete that bigger move at the primary degree should be 5 waves. And then we know that inside wave 1, we should have 5 waves up. So far, we only have 3 waves, and 3 waves doesn't give you confirmation of the change of a trend. Elliott wave confirmation, you need 5 waves up and 3 waves down.
So you need like a pullback to like 3,900 and then go again.
Yeah, I think 3980 right now would be ideal for this 4th wave, based on the structure that we're tracking at a smaller degree. But just because you need to see 5 waves up and 3 waves down at a larger degree doesn't mean that you can't give structure within that move the benefit of the doubt. And so that's why we keep zooming in to other to other time frames to look for that additional confirmation. I'm trying to see where this is my, somehow along the line, my scratch pad that I use for my smaller degree wave counts got labeled as the uber bullish tab, and that was probably around July of 2020. And I said, it's possible this entire thing is just a big wave 1 of the bigger 5th, and it turned out that that's following through pretty nicely. So I would really like to see a consolidation here. I know you and Blake were talking about some resistances that were just hit and some false breakouts over some significant trend levels, so and getting close to that 200-day moving average. So from everything that we see, especially a number of the sectors that we find are really the key drivers, that we think are going to be key drivers in this rally over the next, 12, 18 plus months, really need a little bit of a break.
Could a weaker dollar
want
be
to
a
see
driver?
That break?
Could a weaker dollar be that
It's certainly possible.
a tailwind?
I defer to Lynn for a lot of the whys in terms of macro,
Okay.
fundamental analysis.
Do you have a count on the dollar?
I don't follow it as closely.
Okay, so
I follow the metals pretty closely, and I know those are sort of
that would be
correlated or inverse.
Okay, why don't we take a look at the metals?
You want to take a look at gold?
Yeah, that'd be great.
I really liked what you and is it Centillos?
Oh, Stelios, yes.
Or Stelios, right? What you're talking about as far as the retracement levels.
Yeah,
Stelios. I'm looking at the same things for gold and silver as well. Gold's still trying to hold on to this potential to get one more little pop higher to get a better 5 waves up inside that fifth. But silver, I don't know why. I use IQ feed for my data service, and why the futures, the continuous charts for a lot of the futures start with a Q. But silver looks great as 5 waves up complete for that first wave 1 off of a pretty major low in July. So, again, looking at that 1930s would be ideal support. That's about your halfway point. 1970 to 19 is going to be our ideal fib zone, that 382, 50% to 618 retrace are our most normal fibs that we look for. But we want to see that that's a clean, ABC structure. This might be the first A wave. I mean, this is a little bit small to be all of that. So I probably look for a little bit more of a bounce here as a B wave bounce inside that A wave, and then another bounce to get your full ABC in a reliable retrace. And on that bounce, this B wave.
Okay, you like the
I do a lot.
Okay, silver miners over gold miners.
So I don't, the silver miner ETF chart is not as clean. It doesn't have as good a price history. I do like to track the TXGM. Do you ever look at that?
No, what is it? Oh, okay.
It is a Canadian somewhat equal weight mining ETF. It's not really equal weight because it's just really hard to form a basket of mining stocks when you have 12 to 18 of them that are, so much larger in market cap than the other 100. So, but it tries to be a little bit more diversified than the GDX, and certainly more than the Huey.
So
and we're seeing this similar structure in a lot of these.
Yeah, so if we go back to the GDX, which is what most people trade, that was a significant low that we had about a week ago, or 2 weeks ago, 3 weeks ago.
It's not as, we don't have a clean structure off the low yet. And it relies on a WXY consolidation, which is not as common as your standard ABC, where you have 5 waves down in the C wave. But we did get pretty close to a 618 retrace. And it's gone on, more than long enough. And I think with the way that the metals look off of that low is very, very positive. But when we zoom into the structure off of the low, if this is the bottom of our B wave here, I don't know why this is not snapped.
So the bullion, especially the silver, has the cleanest count.
Yes, I think so. And in a lot of those silver, silver has also been depressed a lot more than gold, and so it could have that beach ball effect.
Yeah, the gold silver ratio looks like
we want to see. Absolutely. I track that a lot. I don't know if I can bring it up so easily, but we want to see this C wave. We're looking at this as a much larger diagonal, which kind of fits more of the flow of a commodities ebb and flow, where you have false moves that look like they could be trending for a long-term rally, but then you get a deep retrace from that. So looking at it is a bigger diagonal structure, I think helps, but we're looking for a nice swing that is going to be comparable in magnitude to the initial move that we got off the 2020 lows, and that should fill out as 5 waves up over the next 24 months or so.
Okay.
But we know, just like in the S&P that we were looking at, inside this wave one, we want to see 5 waves up, and we know what that basic shape should look like. And the initial move off the low is not quite a clean 5 waves up, and it's not clean quite to the ideal region that we'd want to expect for a wave one off the low. When you look at GDXJ, the junior miners that probably have more silver miners incorporated in them, that looks a little bit better. And I think it's probably the inclusion of more stuff like AG, First Majestic and some of those other guys.
Okay.
And I'm looking, again, looking at that structure that we looked for, and the, using Elliott wave as the framework. This filling out 5 waves up and 3 waves down as our wave one and wave two start to that bigger C wave would give us really nice inverse head and shoulders symmetry on the larger charts, or maybe it's big enough that some people might call that like a cup and a handle. That's probably your apartment more than mine.
Okay. Great looks. Really nice looks, Zach. I appreciate it. We'll get our timing together of it being give and take on our next interview.
Yeah.
But
I have one more stock that I want to. Do you have?
Go ahead.
Do you have another
we
minute?
have time. Yeah, sure.
I have a stock. Okay. I have one more stock that you'll appreciate. So one of the things that I noticed, and I think is maybe my big contribution to Elliott Wave, is I was very skeptical of IPOs, just because, as a cynical person sometimes.
Right.
I mean, I'm a total optimist most of the time, but when it comes to things like IPOs, I was very cynical that if it was that good, you have some companies like the Lego brand, they've never gone public. They're family owned for the last 90 years. If you have something really good, you keep it for yourself. So the entire idea of an IPO means that, you've taken something as far as you're going to take it, and now you want to cash out. So I started to see a theme a number of years ago, and I wrote an article with Avi about why I thought IPOs were bad, and that after an initial upside run, with very few exceptions that don't do this, a lot of them get a very, very large ABC consolidation that retraces either up 50% or sometimes even way more than 50% of not necessarily the IPO price, but wherever they started trading on the exchange. And I picked Frog as an example because this is one we just highlighted in our webinar for our members yesterday, that looks like it has completed this big ABC down and is filling out nicely, as long as it gets a 4th and a 5th wave to get 5 waves up off of the low. But I like Frog a lot because as a religious person, you'll really appreciate this. Frog is a mnemonic for fully rely on God.
Oh, nice. Okay.
So
I like what they do. What they do
can be very bullish on. I have no idea.
Okay. They're relying on God.
There's a lot of
besides relying
there's a lot
on
of
God.
stocks where it's a ticker. Some things I know what they do, and I know, but there's a lot of charts that I look at because Garrett and I are, we have a request queue where people can submit. A request for us to do Elliott analysis. So there's a lot of things that I know the ticker. I don't even know I have to go into my settings and this is JFrog.
Yeah.
Limited. And add in the name. So there's some things that I don't even know the name of the company, much less they do. There was something we were trading a number of years ago. It was like a funny example that I used. I think it was BLTH. I thought it was a biotech. The way that it moved, it looked like a biotech company. Yeah. It was like, under $5. Somebody told me they do scented candles. I'm like, okay. I don't always need to know what the company does to see the sentiment manifest on the chart. There's a lot of things when we put out certain.
Yeah. So a chart is a chart is a chart. The only difference is the title and beta.
Right. If you have enough liquidity, and that you get, and there's enough volume of people trading it that you get a decent price pattern, then you can do an Elliott wave analysis, and it's something to trade.
Right. All right. Well, thanks for leaving us with frogs. I think it also was a curse in Egypt, right? before the Exodus.
Exactly.
Huh? So anyway,
Exactly.
shalom,
Yes.
shalom, bro, and you're now my trading warrior brother. You got through an interview with me. I
Wonderful. Thank
appreciate
you,
your
Dale. I
time.
appreciate it.
I appreciate your time and your great work and the team that you're with. And the best way for people to follow up on this, your Twitter handle, of course, is at Zach. Is it Mannes or Maines? Your last name?
Mannes.
Mannes. Okay, like
Mannes.
manna from heaven, like manna. Mannes to follow Zach, and he's with Garrett, and he's been with Avi's his good buddy, so you rise to the level of people that you hang around with. So definitely an elite group that you have there, Zach.
Thank you so much.
And appreciate you joining us on a Friday when everyone's fried by the end of the week. So we'll do it again, Zach. All right, everyone.
Excellent.
Have a great weekend. Remember, no matter what the wave count is, don't just count your waves, count your blessings. And have a great weekend. Do your work, and we'll see everyone Monday. Thanks again, Zach Mannes, for being with us today on Friday. Shabbat Shalom. Okay, see you guys. See you guys. Shalom. Yes, peace, hello, goodbye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.